Jamaica recently secured two major oil export contracts with Trinidad and Tobago, and the numbers show how significant this development is for the country. The first agreement is valued at about $90 million and covers close to 1 million barrels of fuel oil products. The second is a 6-month arrangement with Paria Fuel Trading, worth $50.2 million for 540,000 barrels. These are not small trial shipments. They represent a consistent stream of export revenue that flows into Jamaica month after month. At current pricing, the larger deal works out to around $90 per barrel. Depending on shipment volumes, Jamaica will be earning between $5 and $8 million per month from this contract alone. The Paria arrangement involves 90,000 barrels per month, which translates to about $8.3 million every month for half a year. Altogether, the inflows from these two deals add up to more than $140 million. When converted into local currency, that is over 20 billion Jamaican dollars entering the economy from these export agreements. For context, Jamaica has often been known as a country that depends on imports for its fuel needs. The turning point was the decision decades ago to construct Petrogem, the country's only refinery. Petrogem allows Jamaica to import crude oil, refine it locally, and then distribute or export the finished products. The refinery was built in the 1980s, and while it has faced difficulties over the years, including ownership disputes and questions about efficiency, it remains a critical asset for the country. Without Petrogem, Jamaica would still be entirely dependent on foreign refiners. With Petrogem, Jamaica can now capture value from refining and even supply other countries. The current exports to Trinidad are an example of how the refinery creates opportunities. Crude oil is first brought into the refinery at Kingston. There, it is processed into a range of products, including gasoline, diesel, jet fuel, and fuel oils. The products that matter for these contracts are the marine fuels used for shipping, called very low sulfur fuel oil and high sulfur fuel oil. After refining, the fuel is stored in tanks at Petrogem's terminal. When buyers like Paria place an order, the fuel is pumped into tankers docked at the port, and those ships then carry the product across the Caribbean. The important point here is that Jamaica is not just buying finished fuel abroad and reselling it. By running its own refinery, the country upgrades raw crude oil into higher-value products and keeps more of the margin at home. That margin is now showing up in the national accounts through contracts like the ones with Trinidad. The economic impact of these deals is easy to see. $90 million is equal to about 14 billion Jamaican dollars. That amount alone is larger than the annual budget for several government ministries. Added to the $50 million from the Paria contract, the total foreign exchange earnings rise to a figure that can help the central bank manage currency stability and support imports of other goods. Foreign exchange reserves matter because they help keep the Jamaican dollar from depreciating too quickly against the US dollar. When reserves are strong, inflation stays lower, businesses can plan more confidently, and the economy is more stable overall. Employment is another benefit. Petrogem supports hundreds of skilled jobs in refining, operations, shipping, and port services. These jobs are higher than average in wages and help to build technical skills that can be applied in other sectors of the economy. Training engineers and technicians through refinery operations creates human capital that Jamaica can use for future energy projects. Oil exports are now joining the list as a stable and structured source of earnings that diversify the economy. The symbolism of selling oil products to Trinidad should not be overlooked. For decades, Trinidad and Tobago has been the leading energy exporter in the Caribbean, with its own oil and gas reserves, refineries, and liquefied natural gas facilities. The region has long depended on Trinidad for supply. Now, with Jamaica delivering refined products to Trinidad, the balance has shifted slightly. Jamaica has moved from being just a customer to being a supplier. This does not diminish Trinidad's role, but shows that Jamaica has carved out its own space in the regional energy trade. These contracts are also not isolated. Since 2024, Petrogem has exported about 4.5 million barrels of fuel products, generating more than $500 million in foreign exchange. That shows a pattern. The refinery is not limited to one buyer or one contract. It is becoming a consistent exporter to the region and beyond. The location of Jamaica, close to major shipping lanes and the Panama Canal, adds to the advantage. Ships need bunkering fuel, and Kingston is well placed to become a hub for that service. Looking ahead, the potential for growth is clear. If Petrogem expands its capacity or upgrades its facilities, export volumes could increase further. Doubling output would mean Jamaica could move from hundreds of millions of dollars in revenue into the billion-dollar range. That scale of export earnings would transform Jamaica's economy, allowing for stronger reserves, reduced debt, and more investment in infrastructure, education, and healthcare. There are challenges to manage, such as ensuring that Petrogem remains efficient, upgrading technology to meet international environmental standards, and keeping contracts competitive. But the foundation is strong. The refinery is active, exports are flowing, and demand for marine fuels in the Caribbean remains steady. This development also adds to national pride. Jamaica is demonstrating that a small island can operate complex energy infrastructure and compete in regional markets. The refinery project from the 1980s, once debated and questioned, is proving its worth today. Every shipment that leaves Kingston represents not just barrels of oil, but revenue, jobs, and proof that Jamaica can manage industrial assets effectively. The deals with Trinidad are just one chapter in a larger story. They show that Jamaica has reached a point where it can consistently earn foreign exchange from energy exports. They also highlight the strategic importance of Petrogem as a national asset. The refinery is not simply a facility for domestic supply. It is a gateway into regional trade and a source of economic strength. In summary, Jamaica's oil export agreements with Trinidad and Tobago bring in more than $140 million in combined revenue. They demonstrate the value of having a local refinery, strengthen the country's foreign exchange position, support skilled jobs, and mark a shift in regional trade dynamics. The exports are part of a broader trend that has already generated over $500 million since last year. The potential for future growth is significant, with opportunities to expand exports and increase national income even further. Jamaica has moved from being solely an energy importer to establishing itself as a regional supplier. These contracts are proof that strategic infrastructure like Petrogem can pay off decades after being built. The refinery is now one of the country's most valuable assets, and its role in exports shows how important it is for Jamaica's future economic development. The outlook is positive. With careful management, continued investment, and strong trade partners, Jamaica's refinery exports can grow into one of the country's largest and most reliable sources of income. That is a major step forward for economic stability, regional influence, and national pride.